Good day. Ira Epstein of Linn Associates with your agricultural wrap-up, and this is for Tuesday, the 22nd of October, 2019, just after 2:25 p.m. Central Daylight Time. Well, the positive news for the soybean market today was that China has given another relief, if you will. In other words, no tariff on another 10 million metric ton purchase of soybeans. Now, for the year, they've bought approximately 20 million tons. This would be another 10. We don't know the time frame. That was not part of what they did. And I've still heard nothing about pork. Beans didn't hold up all that well from it, but I'm not expecting them to run away right now. These amounts that China are buying, they're nice. They lead up to the Phase 1 agreement that I think will still be signed in November, maybe in Chile, maybe elsewhere if that unrest continues there. But either way that it goes, it seems that we're on to something to get something done, and the president needs to get something done. The testimony against him today was damaging by some accounts, so we'll see where that goes. In the stock market, you've been all over the board as Brexit takes center stage, and Mr. Johnson today did get the first part done where a reading was accepted. In other words, the terms of the deal are looked at as favorable. However, time frame to debate and do it, forget it. It's going to go through January of next year, maybe longer, maybe this whole thing just unravels. You don't know, and the stock market didn't like that. It broke very hard once it heard that news. But getting back to the grain market, for the week, we're basically unchanged. So here we are on Tuesday. It's only the second day of the week, and the market's holding the gains. That is another way to look at it. Now, if the market were to break hard, support's back at the 18-week average. The bias of the market is up. When you come to a daily bar chart, you see how the market spiked up today, came into the old high that we had here, and could not do anything with that. So the traders will probably look at that as something of a negative when they look at it in the evening. I don't yet. I still see the market with higher lows, but now I'm getting concerned. Today's high at 945 and a quarter, even though it's just a quarter-cent shy of 945 and a half, couldn't get through that to see if there was any stops or anything else above that market. And certainly at these prices, you must understand, most of the recent trade activity that has taken place, certainly most of it through the summer, is below prices that we're at right now. As this all goes on, what it's allowing to happen is the 18-day average of closes, the red number, is able to start moving towards the market price. Now, while it finished today at 922 and a half, yesterday's action was 920. Day before, 917 and a half, 915 and a quarter. It's about 2 cents a day is what I'm saying. And today probably did nothing to hurt that. So we're getting up into the 925 area, but it's still, if you went down to that number, it would have a pattern of a lower high and lower low unless you got over today's high first. And that's looking doubtful just at the moment, given that the market closed off those highs by 11 cents. That's quite a bit. When you take a look at Bollinger Bands, should the market clear this 945 and a half, the next resistance is 949 and a quarter, and that band's been moving at about a penny a day. Just figure that. So maybe it's around 948 tomorrow. And if I look at momentum, this is what's been bothering me. What eating at my stomach here is you lost the embedded reading. When you lose the reading and you don't gain it back, prices often make a run for the 18-day average of closes. And the fact that the market didn't get over 945 and a half, my trading rule is the guys that are selling for that, as long as you don't make a higher high, they're still in play. That doesn't mean they're going to be right, but they're in play. And I still think those two prices are going to try to make a run at each other. In terms of the meal market, we had an outside day down. You now have a market with a lower set of highs, a lower low. You'd have to take out today's high, the high of an outside day down, to convince me that it's not a swing line high. Now, another problem. The bias is up because you're over the 18-day average and momentum down. In plain English, this chart is something of a mess. What it did is when it got up here on these challenges of the 100-day and the upper Bollinger Band, it then had a reading where it tried to come up just through today, and it's failing at doing so. The 18-day average held before. I have no reason to think it may not hold again in this market. If it doesn't, and prices get under 303 and a half, or wherever that Bollinger Band comes comes in, and as I said, it's moving about, in the bottom one, it's moving close to about a penny and a half a day right here. That could be up at the $3 level, right in this zone that I'm pointing at if prices get under that. That should be some near-term support. And in terms of resistance for the oil, it's today. 3,100 is that number on the Bollinger Band. You got to 30.97. You did a heck of a nice job there in running to it. And they're flip-flopping. They're getting more bullish, the oil, than the meal, as you can see on the chart. That's typically not a bullish sign for the soybeans. But this market's now left everybody underneath it in big trouble. So we have an oil market that has come alive, and people probably aren't paying that much attention to it because oil's not what normally gets the market's attention. There's more to this than meets the eye from the looks of it. We'll see if the market can get rid of or do anything with this condition. Now, both numbers were over 80 today. Both numbers were over 80 yesterday on the slow stochastic, not the day before. Tomorrow's going to be an important day to see if can the market embed, or is the overbought condition, and that's where you're at now, up against that Bollinger Band, let loose and the market drifts back a little bit. In the corn market, I see a bearish formation here. Lower highs, lower lows, prices closed under the 18-day average. I think the bears grabbed control of momentum, a bias actually, I should say, bias, the swing line, and then the momentum on the slow stochastic. Target could be wherever that lower Bollinger Band comes in. In the wheat market, you lost the embedded reading. As soon as my eye sees that, I come into thinking price in the 18-day average, and it'll be the 18, not the 100, because the 18 got over the 100, could be where this market wants to head. It no longer has the embedded reading. It does have a bullish crossover. That occurred today, and that's a sign of strength, not weakness. But I think the pullbacks in this market will be well supported. That's another way to look at it, but right now you're just overbought. In the sugar market, you keep running this lower Bollinger Band. You've been here, done this, and you didn't get anywhere with it last time. Will the market get a bounce from here? The market is oversold in a downtrend, trying to hit the Bollinger Band, bounce away, come and hit it again. You have to get over 1239 to negate the bearish chart action. The market is oversold, not embedded, so I'd be a bit cautious right here, but it is a bearish chart. In the coffee, we were looking when you lost the embedded reading to see could the market get up and make a run for the 18-day average of closes. It did yesterday, didn't quite hit it. It did that today, got through it. So this market's in an uptrend, bias up, risk rather substantial because if you even bought at the 9,700 level, the 18-day average, you've got to put a stop all the way back here at this 92.25, just under it. That's a heck of a risk. It's almost $2,000. Then we get to the cocoa market where you're getting, as I explained yesterday, in fact, I've been explaining it, that you're getting this chop sideways action where you're not getting a trend that follows through one way or the other. You get stymied by the upper Bollinger Band. You fall back to the 18-day average. If you fell from here, what had been support, the 100-day average, comes into play with the lower Bollinger Band too. Not a trend. I think the commercials are trying to understand what's going on in Ghana, the Ivory Coast, with these new funds that they have, and a certain amount of dollars are put away for the farmers, but what does it do to the pricing? And that's what I think has confused the market. The cotton is still in a bullish campaign, but it is overbought as can be. It's had an uptrend with higher lows, higher highs. It's recently come up, and this peak right here yesterday, if you look at it at 65.48, did not take out the 65.85. So I'm arguing that for the lack of anything better to say, you've got higher lows, lower highs. You had a bullish crossover, like in the wheat market, where the 18-day average got over the 100, but like the wheat that is now overbought because it lost the embedded reading, this market has never been embedded, it's just overbought. Maybe time for a little bit of a correction. In the cattle market, as long as you keep the embedded reading alive, I say the pros will be buying this market on pullbacks. Now, can you get a flip-flop here where the market loses that and gets back to the 18-day average trying to hold? You could. And the reason that I say that is if we take a look at this high here, 114.27.5, it did not take out 114.42.5, the last high. So I've got this pattern of lower highs. I could argue, I guess, lower lows, maybe move this arrow pointing down. I think that is the right way it should be, and just looking at this. Maybe the 18-day average comes into play, and will that number hold up? That's what I don't know. It's interesting. The fact that you've had so much sideways action here, I think, puts a bit of fear in people's mind. Yet feeder cattle came alive today, and they did a nice job. They had an outside day up. The battleground has been, for the past 3 sessions here, the 18-day average, it went back to a bullish configuration. Higher lows, higher highs. So until today's low is taken out of 138.52 and 65, it's 138.65. I'm looking over there, and this is the 32.5, 52.5. I think the pros are going to be buyers in that 18-day average. Take that out, and I think they go back to the drawing board. In the hog market, this is not good action. I mean, we keep hearing China's going to be buying or is buying pork. I don't see that in the pricing. I see a market in a downtrend. Lower highs, lower lows, momentum down, bias down. All the market's been able to do recently is get back towards this 100-day and the 18-day average, finding resistance without a trend up until today. You had a higher high, lower low. You came up yesterday. Now you've had the outside day down. That puts into play the lower Bollinger Band, but you're back into the 65-cent range. Certainly nothing yet looking bullish. What would turn the market and capture the shorts? Taking out today's high and staying above these two averages. That could put into play 72.71 if it were to happen on Wednesday or Thursday. We'll see if that does occur. So when I look at all that's going on, an interesting day, but nothing special. And that's a great time to look at the metals report that I wrote yesterday. Now, in the silver market, today's break took the market down to very important support zones. The market failed to break through a key number. I'm not going to tell you that number. I want you to look at the report. You're going to get seasonal charts. In other words, the more research charts. You're going to get a monthly, a quarterly, daily, weekly charts with the different studies I put together showing you what I'm seeing in the silver at this point. To see it, simply go to our website, www.iraepstein.com. Under the word research, you'll see our metals report. Go for it there. Now that I'm able to do these reports, again, we fixed our software. As I said, actually, it's all new. Brent, everything's new on it. I'm going to start doing grain reports for you as well, and maybe occasional meats as well in there. Sugar, coffee, why not? So look for me to do a whole host of these on a much more regular basis from this point forward. Silver was the first one. I'm going to try to get something else done this week as well. I'm Ira Epstein. You have a great day. I will see you all tomorrow.